Now, I'll be releasing a video, and I'll show you this slide, not so much that you see where my career has taken me. And this slide shows all the positions I've had since '89. I was introduced in '85 to the wave principle. But let me just take a brief moment to mention some of the lessons learned. How have I gotten from there, just learning the wave principle, to where I am now? In '89, I joined Saving Commodities. I was standing on the floor of the exchange in New York with gold traders, standing on the top step. I was looking at a weekly and daily chart at the time. I didn't have access to a real-time quote system. There was no internet. But yet I was working with traders on the floor who were making quick decisions. I was charting by hand ticks, and it was working for me. But the lesson I learned at Saving Commodities while working on the floor really had nothing to do with the wave principle directly. What it had to do with people who didn't even know me walking up to me and asking my opinion. I mean, it didn't take but 2 weeks from standing on that floor, just getting myself adjusted to the floor and the way the market trades, before traders with badges pinned on them, were asking me, Jim, what do you think about the market? What should I be doing? Now, these people didn't work for Saving Commodities. I learned that people will take a tip from anybody, and in fact, they didn't even know my name. And if I was on a streak and doing well, I would see them several times a day. As soon as I was wrong once or twice, I didn't see them again. I'd bump into them later, maybe in the cafeteria, ask them how it's been going the last few weeks, and they say, "Oh, well, now I'm trading, RSI or stochastics." I'd really come to find out that they've traded both of them, as well as 1 or 2 other methodologies in 2 or 3 weeks' time. They didn't stick with anything. They never learned anything thoroughly enough to make it worth their while and profitable to them. And these were professional traders, and that's something that's always stayed with me. And obviously, here we are in 2008. I started reading about the wave principle in, let's just say, '85. It might have been a year earlier than that. And I'm still using the same methodology. So I've learned that lesson. Now, the Bank of New York had nothing to do with the markets. I was a corporate credit analyst there. My job was to look at financial statements of major companies that wanted loans. And they sent me to a 7-month intensive course of how to read financial statements. And I found it interesting that for 7 months, and this course was 3 to 4 times a week, and the 4 hours we spent each day in a classroom paled in comparison to the hours we spent outside the classroom reading these reports and finding the errors, or even the fraud. This is what they were teaching me, to find sometimes the outright fraud. You had to read all the footnotes. I thought to myself, and of course now I've already had a kind of an I was kind of favored technical analysis to begin with, but my experience at the bank convinced me that I can make numbers say anything I want to. They can buy another company right before they have to prepare their financial statements, so they can adjust their earnings based on the company just acquired. They can do lots of things. Price never lies. Price is the final arbiter. That's all we care about, price. That's technical analysis. Whenever you buy or sell, you are taking into account the news around you, what's going on in the world. And that's reflected in price. I don't have to be the guy picking the tops and bottoms, so I'll leave that for someone smarter than myself or luckier than myself. I want the bulk of the trend. From our perspective, I want that third wave. I came to Elliott Wave International and just started following lots of markets, working night shifts, following everything, just honing my ability. I went to Nexus Capital, and that was a hedge fund, so I was just exposed to sitting on their desk, helping the traders. Should I execute an order now? Should I wait a minute? Can I squeeze 10 pips out of this? As well as doing analysis, trying to find the opportunities that we needed to take advantage of. But it certainly exposed me to the money side of this. Everything before that was really theoretical, purely analytical. This was turning that into real money. And it was very valuable. Now, of course, I came back to Elliott Wave International, and here we are. And I'm using all that experience to try to help you make decisions. And I cannot make that decision for you. We're getting towards the end, and I save this for the end because people are always asking for more specific trading advice. But I can't really offer that. We have too many people. I don't know your risk tolerances. I don't know if you like to bet large and with big risk, or if you're more like me and I'll let an opportunity go by because there's another one coming. I'm patient. It wouldn't bother me at all today if I go back to my office and complete writing my daily update today. If I was flat all the markets, if I had no opinion, it wouldn't bother me one bit. To me, that is a position. I have risk when I have no opinion. I might miss something, but I know we cover enough markets. We cover them on various time frames. There's always an opportunity. Just today, if you were reading my intraday work this morning, you'll see that instead of talking the big picture, the dollar had fallen a little bit further than I might have expected overnight. I drilled down and was looking at 15 and 30-minute charts, counting fives. So there's an opportunity on a different time frame. I'd rather see that opportunity on a daily chart like we did middle last year with the dollar, and just day after day be able to pound the table saying the dollar's going down, the dollar's going down. Guys, every bounce is an opportunity. It's a correction. It'll be an opportunity. Sometimes that's not the case, and that's not the case we have going on currently. We're more in a transitional stage, or at least I think we're in a transitional stage. So today, I took the same tools we've discussed here and just brought them down to a short-term time frame. We have opportunities there. Otherwise, we could just sit back and let the market go. Wait for the setup. Wait for higher confidence. So I think for today anyway, I think that's sort of the place that we should leave it. We've covered a lot of ground, starting with how to learn the wave principle. And let me say this, I will stress to you, in my experience, which is a long one really, the clients that have stayed with us the longest, clients who have gotten the most out of my efforts as an analyst, are those clients who at least have a basic understanding of the wave principle. And it seems kind of counterintuitive. You might think, well, if they can count waves, they educate themselves enough, and with our help to count their own waves, they won't need me, and that's fine. That's all right. But I found those clients stay with us. They use me or one of my peers as a sounding board. They have their own count. They have their own market idea. They'll look at what we're saying. If we agree, they're more confident. If we disagree, they take a step back. Why? What levels would make their count right or wrong? What levels would make our count right or wrong? And they play off those levels. They might stand aside until the market proves one side or the other wrong outright, and then take action. So again, from what we covered today, education. If we ever have the opportunity to talk on the phone, you'll discover that I stress that over everything. If you're going to use the method, you should understand the method. It goes back to my Saban commodities. Most of the guys didn't even know my name, but yet they're willing to bet their money on what I thought. Some of the guys thought my name was Elliott because I'd say, well, I use the Elliott wave principle, and they assumed this was just something I came up with. I'm not smart enough to come up with something like this. I read the book, and I took it from there. It's not very difficult if you read it several times and consider it and start looking at charts. Very easy to do. So let's leave it there today. I answered many of the questions that we have gotten in via email from our last attempt, and questions that I receive on a regular basis. If you ever have a question, don't hesitate to send it to me. On every update, you will see the sales mail at Elliott Wave address. Click on that and send me an email. I reply to virtually every email I receive that has a question in it. One way or another, you'll get a response. So take advantage of that. So I'll leave it there for today. Thanks again for taking the time. For some of you, it's evening, some it's early morning. So I do appreciate you taking this time with me. Thanks again.